Good afternoon, Scott Redler, T3 Live. Welcome to today's recap. So the market opened up pretty strong, and a lot of momentum names were acting very well. A lot of stocks extended that we've been playing for a while. Google extended, Apple extended. Some other stocks tried to go, and then all of a sudden it just felt around like 11, 12 o'clock. Spiders were really for sale, or every time we went up, it was like begrudgingly. So we talked about pivot levels, talked about the recent resistance, which was like 140.90, 140.93. Said as long as we hold above it, we'll see short-term momentum or pent-up momentum stay with the market. But if we close below it, all of a sudden we could get somewhat of an outside day or a push-through failure or a red dog reversal. And literally it felt like that at around 10 to 4, and then all of a sudden a little buy program came in and closed 40, 50 cents off the lows. And although today felt, or hurtful if you chase stocks and you bought wrong, or if you were holding big positions that you couldn't handle, but overall, not that much damage, just a small little day to take notice. It could have been more extreme if we would have closed at the dead lows. I think a lot of guys probably would have been a lot more short, or a little bit more concerned. But if you take a quick look at the chart of the spiders, you will see all you have here, is we tried to break above the level I just talked about, which was 140.92. We hit as high as 141.38. If you look here, this point of reference was 141.65. So we really, we were never able to actually make it to that point. And then, we reversed and it went back below it and came off those lows. So all in all, we're still above the 8-day. We're still above the upper support here, and everyone's saying game over. It's not quite game over, but just a small little signal, just a frustrating day that people definitely didn't want to happen. And if you want to be a little bit more precise, I guess we start getting below today's low of 140.37 or below this price that I've talked about a lot, 139.80, would then perhaps put us a bit in some type of correction mode. But for right now, it's just a red day. Not that big of a deal. Look at the last time we tried to fail, we gapped up. So at this point, a small little frustrating type day if you didn't maneuver well. I know, not to gloat, to be honest. I came in long, Apple and Google, and I had some Goldman Sachs. And my plan was to try and ride out some Apple until I felt like it got a little frothy. Stay with Google for it to perhaps test the yearly highs, or maybe push through and fail. And if it does that, short term, get out of the way. Macro, it's fine. And with Goldman, I figured maybe we'll even get some follow through. So if you go to Apple first, Apple on the daily chart now, it doesn't look like game over, obviously, but it did sell off a lot off the highs here, in front of the old highs. And we've talked about how to enter Apple. We talked about right here when it went into that gap. That was a great little swing entry. If you missed that one, my swing entry was right here when it tried to get in the gap and held firm. That's when I got involved. And then here was where we added, and then we flagged, and then there you go again. Now today we hit as high as 638.61 and closed pretty significantly off the highs. I did tweet around, like 12:30-ish. Around 6:37, I sold some Apple, and then it pulled in 6:36. I'm like, you know what? It's been a nice trade, 30 points from the swing side of it, nice cash flow back and forth along the way. I'm flat Apple for the first time in a while. Some guys are actually even looking to get short versus the highs. I just was like, I'm not going to flip. I'm just going to get out, be happy that the trade worked out, and then look for a new entry. It just was a bit extended. Then lo and behold, it pulled off a lot further. So what happened was I sold my Apple, and then quickly you look at Google. Google held up much better. For me, I thought perhaps it would do a push through failure short term through this high here of 670.25, which it somewhat did, but it really had a bid to it. And looking to where it came from, all the way down here, here is your move before earnings. Here's your gap up. This was your real swing entry. This was the price point that we talked about many times. Here was your gap up after earnings, consolidated. That was your buy. Then you did have another add-on buy right here. Some of us got involved on this day. So I didn't actually, I missed a swing entry. So I bought it around 651. So to me, my last sell was right around 670, so that was like 19 points in 2 days, a nice 2-day move. And I would have probably stayed long if we closed above the prior high here of 670 and a quarter, but since we pushed through and came off it, I thought maybe we get a doji, get out of it, let it consolidate for a few days, and then at some point get another push, because on the monthly chart, this thing looks like it's going to go a hell of a lot higher. So hopefully me by trying to be cute and getting out of the way to be perfect doesn't keep me from getting back involved, because I do think that this is going to clear this point, and then your next point of reference here is 697, and then you have the highs of 747, which I do think it's taken out at some particular point. So with that said, also you have Goldman Sachs that on the daily chart, it tried pushing above this momentum level, and I came in long. I added right around 104.50-ish, and it did work a little bit. Went to 105.60. I would say I sold 2/3 into that, and then I held the third, and then it didn't work. Once it went back below 104, 104.38, I got stopped out because it happened after I left, and then it closed at 103.26. So right now, not the end of the world, but pretty ugly candle that it couldn't hold this momentum area, so it got me out. So in actuality, by just say 2 o'clock or like 1 o'clock when I got stopped out of the Goldman, I got net short. Everyone on the feed wants to know, when's Red Dog going to be net short? So I got net short because I got stopped. I sold my Apple into the strength, into the excitement, sold my Google into the excitement. Goldman actually worked, and then I got stopped out of the last part that didn't. And then the hedge that I had on that I've been maneuvering back and forth, I wound up keeping. So which I didn't even know, because I let my stops work for me and my bracket orders work. Sometimes you could be away from your computer, just like if you have a full-time job and you want to hold positions, you could put levels in that tell you the trade has changed, so this way you're safe and sound and you don't have to be in front of your keyboard all day long. Or if you're a trader and it's the summer and you want to be at the beach, sometimes it's even better just to trail your stocks and have the levels in there, let them work out, because this back and forth noise could get a little frustrating. A lot of guys that were long, that 15 minutes before the close, they were in a lot of pain, and then by the close, they were fine. I'm sure you heard a lot of banging and screaming on the floor. That's what happens in a trading floor, whatever. So, but P.S. I've got net short spiders, and then in the last few minutes, I decided, which I told the virtual trading floor, I sold my last shares of Apple at 636. So, below 632, I could buy a little bit. Just to have some, because sold some strength by the dip. I do think, though, you're going to get at least a retest of this area. Maybe, who knows? Maybe it opens up tomorrow and then it does some work above this level, which was, your 630, or it comes back. And typically, Apple likes to retest. So I do think there will be a better level to buy somewhere around here, which means we'll have more market weakness, but I'm not sure. That's when I'll probably get back to some type of full position, or we test this gap of 623, which is the same way, we tested the gap here. After, we failed up here at, 616, then within a day we were down to as low as 600, so that's where you were a buyer. I would say here would probably be, a better buy area than this little zone, but, I feel like I have the luxury of buying it back because I sold it well. So tomorrow my plan is, if we gap up, 4 handles, Apple will be up a few dollars, I'll sell it. I'll probably short a little bit more spiders and, try and maneuver it to see what the story is. And if we gap down, I'm more net short with the spiders. I'll cover some spiders, stay with that. And typically they take Apple positive anyway. So I'll wait for some kind of relative strength divergence where it stops going down when the futures are still going down, and then it hopefully goes negative to positive, add to my positions because I'm only small. So, make some money as it goes positive, sell a little bit, get flat, and then see what happens from there. Because even if it's going to go lower, typically Apple likes to fill its gaps one way or another, unless it's a pro gap, which we've seen a few different times. Or the only way it wouldn't is if there's some kind of bad news, and then I'll just salvage the trade, and I'm short spiders anyway, so it's fine. So for me, big travel range from 638 and change down to below 632, saved myself 6 points. Felt compelled like I could do it instead of just being net short the spiders, just in case we open up a little bit. So I took out best in breed. As far as some other things, gold really not doing anything. Yesterday, towards the end of the day, gold failed, giving you a clue that it wasn't ready to go again. Definitely frustrating. A lot of the gold bugs, they're definitely bugging out a bit. Closed the week, open lower. Still in this crappy, monotonous range. Just avoid till then. Silver, I tried being long, got stopped out yesterday. Still doing nothing, not worth your time. No potency to the upside. It actually looks more bearish, and so does GLD, but we'll see what happens there. What did XOM do at the end of the day? Just closed off the highs. Choppy up here, but still fine. CVX, what'd you do? Same thing, off the highs, but still in its trend, no big deal. Target, bit stronger. Stock that I've been talking about many different times. I wish I don't know why I didn't have it in my swing account, but here was your real buy. And then, this actually closed on the highs. Lot to like here for, a macro investor who's staying the course. Home Depot, how did you close? On the highs. Nice little breakout to the upside or near the highs. Great. 2 years ago, this was my stock pick of the year, and look where it is now. Nice 2-year hold. Equity markets aren't dead, even though we didn't close on our highs today, and short-term intermediate guys like myself might be a little cautious. This stock is rewarding investors for staying the course. A lot to like there. Walmart, still in its trend. Getting a little faulty up here, but it's fine. It's just resting. Still flagging above the 21-day. It's at the 8-day. You have another little downtrend triangle to deal with here. If the market wants to continue, it could easily break above it. If you want to have a high level stop and you're uncommitted, put it at 73. Groupon, we said if it can't take back 630, it's a dead short, and Groupon closed at 551. Not worth anybody's time. Same path as, I guess, the Zynga that just opened down and has been doing nothing for almost 2 weeks. So, maybe the Zynga turns into a little bit of a gap trade, if you see some heavy volume just to fill it, So look how long that took. So for Groupon, I would just keep it off the radar. It's no big deal. Pow, gone. Nobody's stuck in this thing. It's just a disaster. Just unfortunate the way the investment bankers, thought back in, I feel like a decade ago, they priced things and no one cared about PEs, no one cared about valuations because everyone was just pretty stupid. So I think it's actually a better environment that investors just aren't that dumb anymore, and they know when these things are priced and the valuations just aren't there. When Facebook was going to come public and it already had 7 different moves in the private market to then get stuffed down the throat of the average investor at 40 or so, or 43 where it opened, people realized that it's not going to be able to sustain a $110 billion valuation when it only does $4 billion in revenues and doesn't even make $1 billion in net profit. So, all these investment bankers try to make money, make all their private guys money, and it just, the street's not that stupid where they're going to just buy it because, it's a name and there's a thesis there. So, I think a lot of these social media stocks that are good companies that are going to make money, they just were priced to fail because there was too many damn angel rounds or too many, rounds of higher valuations before. These things had lives that, pre-existing the public market, that it should have been on the public market, or it never should have became public. Meaning that, there are investors in Facebook at $1, $8, $12, $16, $22, $31, $32 is when everyone started hearing about it and getting it on the street through the private market, the deals, and then it didn't, got public price was 38, it opened to 43, and pow. So it went from $1 to 43 before even an investor was allowed to touch it. It doesn't work that way. But anyway, that's just the old school Wall Street that just still doesn't get it. But that's why, again, retail investors aren't using the same avenues they used to by calling a broker saying, buy me this. They're online, they're a member here or they're a member somewhere, or if they're prop trading, whatever. And they're pushing their own keys because they want to be accountable. And I think that's, a change that's, for the upside, to the market. Every day you hear, oh, where's the retail investor? Where's this? Where's that? And you know what? The smart ones are still trading. They're finding good stocks. They're staying the course, or they're using a money manager and just putting a macro plan together with S&P 500 funds or whatever. They're not calling a broker where the broker is more worried about his commissions, and where to sell so he could have a good month and at the brunt of the actual investor. So that whole system just never worked. And guys are getting smarter. Same way in America, people are getting smarter. They're saving. You know, they're being a little bit more cost conscious when they're shopping. That's why you have your Costco, your Walmart, your Target, you know, your Home Depot. These stocks are doing well because common sense is saying that the consumer is getting smarter, and hopefully it'll also you know, transcend to the voters, where, you know, they'll look at Paul Ryan. I'm not going to get political, but I know he's a fiscal conservative. People say he's radical. I don't think he's radical. I just think he's smart. We have a bloated pension system. You can't support pensions that are telling people they could have a guaranteed 7-8% a year when these pensions are being reported saying they've made 1 to 2% for the course of the year, and they're guaranteeing 7 to 8%, and the S&P's been in a decade range making no progress. Where does that money come from? It comes from the taxpayers. So the pension and the entitlement systems are broken. They need a revamp. You need to compromise. You need a reorg. You know, we need a lot of things to get ourselves along the right path, but that's not, you know, neither here or there, and not why you watch T3 Live, so I rant about politics and whatnot, but it's my mantra. Deal with it. Same way I did the Iron Man this weekend. Turn it off if you don't want to watch. Anyway, sorry. Woo! Should I put the Red Dog? Oh, my Red Dog doll's not here. Anyway, so with all that said, today was a small day to put a little caution out there. I don't think it's game over. I don't think the highs of the year are in. You know, I've heard a lot of stories about the triple top theory where we're going to fall off a cliff in the next week or two. We'll see. If it does, we have to break 139.80 first, and we'll be the first to let you know that, you know, things have changed. Get out, get net short, get heavy. But for right now, you look at the spiders. All it is a day in the life. Couldn't find upside momentum. You know, right near these highs here, still an upper flag. You know, just we'll watch this very closely. We break and close below this with any type of authority. You know, who knows? Maybe we'll get some corrective activity and we'll retest this gap. You know, if you remember the last few times we broke above this end of the range, you know, we kind of failed. And that's where we're really at here. If you look at this channel that we've been following, we did one outskirt to the downside, okay, before Draghi's statements. That was right around here. You know, and then, you know, each time we got to the top end, we came back in. And this time we've been just holding higher, you know, frustrating shorts. So maybe they do get a little trade to the downside to retest this area. This wouldn't be so out of whack. But, you know, for this to happen, it's got to get through here first. And with the patterns that I saw today, it's worth, you know, making sure you have a little bit of a hedge. I know, you know, early on guys were saying the VIX was up 7%, you know, and I think it wound up closing up more than that. So this, you know, the VIX, which is basically broken, which I don't think is a good thing to turn to, gave you little clues that maybe there would be some kind of cute rug pull later in the day. And guys on our chat room were talking about why is the VIX up 7%. I think it was around 11 o'clock when spiders were like 20 cents off the highs and Apple and Google were doing so well. So sometimes you got to look behind the scenes, not get frustrated at the price action, but see what it's telling you. And it was telling you maybe a little bit of a fancy pull-in today that could lead to more, but maybe it just wasn't ready, and, you know, we'll know that in the coming days. Scott Redler, T3 Live, the recap. See you tomorrow at the morning call. I will have Jill. Brittany's, actually, Lindsay's coming in Thursday, and we'll tell you what the scoop is in the morning. Have a good night.